Good afternoon, everybody. Welcome to the what we think will probably be a truncated version of the bull sessions in honor of or in deference to our roundtable this evening, which is coming up in a few hours. My name is Mark Robertson. I am joined here by that magical mathematician and raconteur, Ken Kavula.
We're in flannel today, huh? Okay.
You are wearing flannel. Do you remember this image from a few years ago?
I don't, but I've only really ever shot a gun once in my entire life, so I'm not especially enamored with those things. But
Well, me too. I think Ann Manning's going to talk about him a little bit tonight, but me too. I think I may have shot a gun once as like a 10-year-old duck hunting, and I did not see the glamour and luster of it. So I went back one other time with a bow hunter, and we sat up in a tree in the freezing. And needless to say, I didn't go back for that either. Did never had to fight with a bear. But no, that image is actually from the financial crisis, and your image is superimposed on, I believe, Ben Bernanke.
oh, that looks more like a groundhog in the background than a bear. You
That
know that,
people
Mark?
people have also said that we do not shoot groundhogs. In fact, at Manifest
Sorry.
Investing, no animal is ever harmed in presentation on the screen.
All
But no,
right.
that's a Bernanke and Paulson picture back from when they were attempting to fix the financial crisis back in 2008. So I think you're on Paulson and I'm on Bernanke.
All right.
Whatever. All right, we're going to spend some time talking about stuff for tonight, but specifically just going through a few of our favorite screens. I don't know if Dean Printy is with us. It's something that he had asked for. We cover this every once in a while. We need to cover it more because I'm starting to get cards and letters that basically go something like, "Oh my gosh, I didn't know I could do this." And there are a number of things that can be most useful. We're going to put the tip of our toes in the iceberg waters and show you some of it today, but it is an area where you can have some great fun. And of
I'll tell
course,
you, Mark, I discovered within the last week that our library version of Value Line, which didn't allow me to do much screening, is now allowing me to do screening on almost any criteria that I want to use. So I don't know if that means that the library edition has gotten beefed up a little bit, or if my library paid a little bit more to have some things unlocked. But I'm quite pleased that the Genesee County Library System at least lets me use the Value Line screener almost as if I had a subscription to it. Good thing.
yeah, and that's a good thing. We can hand out some homework. One of the things that they have energized and fixed some formatting mysteries is on the value line low total return. You can now screen on that.
Yeah.
So that is an interesting thing
Ken,
to take advantage
Ken, on that thing with the value line, yeah, the areas here in Virginia and Maryland and DC all have that ability to do the screening criteria. So they may have opened up something more at your library.
Okay, tell me, does anybody get Morningstar from their library? Kevin or Mark, do you get
Yeah,
Morningstar
we
that
do.
way?
we
Yeah, we
do.
get
Have you noticed
Morningstar, and you can screen on it too.
have you noticed a drastic change in the entry format to Morningstar?
Absolutely. I think it happened last week or the week before.
Did it? This is the first time I've gone into Morningstar in maybe 8 or 9 days, and I was quite taken aback by the fact that I had to wade through a couple of different screens and trying to figure out how I could get to where I wanted to be. Really a difference. I think it's going to be worth us talking a little bit about it at some point, Mark.
Yeah, I'll make a note of that because they have done something different with the stock. There's a special stock screen that's supposed to be simpler and faster. By screen, I mean display. So we'll
Yeah, we should walk the people through how to get back to the actual company reports, and then also if the screener's changed at all. I didn't use the screener today, so I don't know, but if it has, that'd certainly be interesting to put into some of our screening presentations then.
Okay, so I think we've spent long enough. So we'll just say good night. See everybody tonight at the. No, I'm kidding. Um, I did want to mention to everybody his name's not on the title slide, but he is on the slide for tonight. And welcome him, Kevin Gologly from our Better Investing's Maryland and DC chapter. Are you an adopted part of DC or just simply Maryland, Kevin?
Well, I am a director in the DC regional chapter, but I moved
Okay.
to Baltimore 6 years ago.
Okay.
And so I just actually won the portfolio contest for the Maryland chapter because I'm not a director. Otherwise, the director would have won.
Oh,
So
cool.
I get the best of both worlds. I got an extra $25.
So what's next? Are you taking over like Richmond or West Virginia or whatever? Or is
We
this is this a march of acquisition for you or?
No, the DC regional chapter is Montgomery County, Maryland, and DC, and almost all of Virginia now, because the Central Virginia chapter went under a couple years ago. So we go all the way down to Tidewater.
Okay. All right, we better get going, guys, or we're going to be here till the round table starts, and that would not be good for me. All right, here's our slide that we put up almost every week, but with some new news here. Portillo's is opening a new location in Denver. And in fact, they have announced plans and mapped out a plan to add 920 new Portillo's locations. So this is just your reminder that Portillo's is not a sponsor of this session, but they should be.
Mark, I've heard rumors that one of them is going to be in far western Wayne County, near Plymouth, Canton somewhere. So we'll have to see if that bears fruit.
Well, I think we should do a live simulcast from there when we can.
If it does open, let's go down and do it, and then we can just drive right on to Punxsutawney. Then, okay?
Absolutely. Why not? All right. Here's our standard disclaimer. A lot of familiar names in the crowd. There are a few new names. Welcome. We appreciate you coming and checking this out. This is an educational demonstration, and we're serious. No investment recommendation whatsoever is intended by anything that we do here. What we are trying to do here is take what we have learned. We are among hundreds of thousands of investors who discovered the modern investment club movement. So the stuff we talk about here is simply to share the methods, techniques, philosophies, beliefs, designs, and lessons learned by that modern investment club movement. That's what we're trying to do. Please do your own homework, do your own analysis of any company. If we own something, we'll try to remember to disclose that and share that. And just please make your own decisions. We do have our roundtable webcast tonight. That's a monthly webcast done since 2010. And where we simply share 4 or 5 ideas. We have 4 really cool stocks for tonight. And if you'd like to be reminded of that on a monthly basis, because I don't know about you, Ken, but I need these reminders to be in the right place.
More and more as I get older, Mark. More and more as I get older. Yeah.
So Natalie is providing an incredible service. Send her an email. She will not inundate you with email. She'll send you an occasional reminder, nkavula1@comcast.net. And she'd also be willing to welcome friends and family. If you have any questions or comments or would like copies of the slides, our 2 email addresses are down there. And I'm willing to sell Kevin's if you send me a small stipend. Okay. All right, here's our quick look at the market. We use the value line arithmetic average, which is the average of the companies in the standard edition, basically. And the light green bar on the right will be colored solid green as we come to the end of the quarter. And it has come all the way down from that blue trend line to where it's sitting now. And the average, think of it as an average, return forecast in value line right now runs at about 12%. So we're kind of back in kind of a normal range, maybe even a little bit attractive. Any comments, Ken?
Well, that light green bar was actually almost touching the blue line
it was over
at the beginning of September, wasn't it?
It was.
Yeah.
Which means that September has not been kind.
Nope, been a rough month.
Today seems to be behaving fairly well. So we'll see. We continue to hope for the best. All right, here's one thing I did want to share with everybody. A number of you have sent me notes after seeing it mentioned in our weekly update. Last Friday, Jeremy Grantham was on Josh Brown's Compound and Friends. Jeremy is sitting there to the left. That's Josh Brown and Michael Batnick on the right. Many of you know Josh from CNBC. And they put on lots of webcasts. This one happens to be every Friday. But Jeremy Grantham is one of the people that we have paid attention to over the years. And it's an interesting show. It runs like an hour and 45 minutes. They typically check in at 50 or 60 minutes, but he just kept going and going. He talked a lot about quality. He is regarded as a bubble. He's preoccupied with this notion of bubbles, so he takes great pride in being regarded that way. But you can actually review the entire show. The thing I would point out is he spends about 10 minutes talking about what makes a quality company. And they also introduced us or made us aware that they are going to be launching a quality ETF. And in the spirit of today's session here, we're going to take a look at this quality fund that has been there for many years at GMO. The G stands for Grantham. And it's always been one of those places that I just keep an eye on to watch, what type of high quality stocks are in favor amongst people like this. And he goes through a fairly elaborate explanation of quality, pointing out that it's worth a couple of percentage points of performance advantage over the long term. And he basically says it's probably the most important compelling factor for any investment. So it's kind of wild. Now, he does go into a number of areas, talks about some interesting stuff. By the way, and I had not heard this before, but I'm sure it's truthful, they actually invented the index fund before Vanguard. And they actually go through the story and talk about it. And then he also spends a lot of time. In fact, I had to check my dial. I thought it was Ken Kavula on the other end because he was talking about these SPACs and these smaller companies without earnings. And it felt like Ken was actually just chiming in on this one, but it was Jeremy, and sounded a lot like, well, you can. So I would recommend that you take a look at that one. And
Mark, we're getting a question. Do you know what the Kay is calling it a Brillo thingy? Do you know what this little animal stands for in the front of the desk here?
I don't know. I think maybe it's some type of a tribute to Mike's kids or something like that. If anybody in the audience knows the answer to that question, I do not.
Okay. Usually our audience is right on top of things, so we'll ask. I think it's really good, Mark, as an exercise. If you'd like something to do when you're watching some of these talking heads, I think identifying and keeping a short list of people that invest the same way we do or near the way we do, that are in it for the long term and that talk that talk and walk that walk. I think it's interesting to try to come up with a list of the commentators and also the people that are asking the questions on CNBC or Fox News or Bloomberg or any of them. And I do place our friend here, Josh, near the top of that list. I think he's a classic long-term investor, and I think most of what he says most of the time points in that direction.
Yeah, I've spent some time with Josh over the years, and it's been some good moments. And maybe someday I'll sit in that chair and answer some of his questions about quality. Who knows? Ken, you and I could go do that someday.
Okay.
It would be fun. It would be fun.
Keep Portillo's out of that conversation.
Yeah.
No Portillo's. These guys need to know about Portillo's if they don't.
We're talking quality.
Well, yeah, but these guys think in terms of New York pizza being pizza too. I mean, come on. All right.
I'm getting an answer, Mark, that says that's an SOS pad copycat.
SOS pad copycat. Okay.
Yeah, I don't know if that means anything to anybody else, but I have one of the audience members telling me that's what it is.
Well, I'll ask Michael if he has an explanation for it, and if he doesn't,
Okay.
Ben Carlson will definitely tell me to. Okay, I'll find out, and I'll let you know. But one of the things that came up during the discussion is Jeremy went on a bit of a rant, bashing anybody who'd be willing to invest in small companies, and as taking on inordinate amount of risks and all that kind of stuff. But then he transitioned into his perfect Kavula, where he talked about, I'm not talking about the companies that actually have earnings. I'm talking about the ones that don't, and companies that don't have revenues. But he just pointed out that he doesn't see this trend easing up, which is really troubling to me because I have some investments in the funds that are shown here on the screen, and I I've always looked at these type of times as opportunities to accumulate, and maybe it is a long term versus a shorter intermediate term thing. But Ken, I was a bit uncomfortable with these guys all sitting there completely trashing small caps in general. So
Well, Mark, I think when we start putting our lists together, we have to remind ourselves that one of our guiding principles when we first started doing these lists 8 or 10 years ago was to expect the same out of our small caps as we were expecting out of our medium size and large size companies. And that meant they had to have history, they had to have earnings, they had to have some consistency to what was going on, they had to have decent balance sheets. All the things that we expect when we're looking at high quality companies, we need to expect that out of the small companies that we're picking. And I think maybe occasionally in our zeal to pick an unknown explosive winner, we've sometimes neglected a few of those good old fashioned standards that we need to keep in mind as we're picking great small companies. So I'm going to try to keep both of us on the straight and narrow, and we've both been guilty of it, let me tell you.
yeah, so I need to somehow limit your number of yellow cards and red cards for this year's show, huh? In order to get my guys in there, because Portillo's is coming back. So
well, maybe we need to pick 15 then to water it down a little bit. I don't know.
And again, the links to that session session with Josh Brown and Jeremy Grantham are available on our homepage. So you can take a look there. I just threw this one in here as a reminder of this fairly big situation that is out there with Novo Nordisk and Eli Lilly and their obesity pills. And this is a great article that was in Barron's, I believe, last weekend. And it just kind of steps through a number of things, just pointing out that these things are not cheap, at least not now. And we're already starting to see a fairly noticeable increase here over the last couple of years because the Medicaid covers the pills where Medicare doesn't. That's the whole article, kind of in summation, and along with a big question mark as to when that might happen. This paragraph towards the end actually covers it pretty well. No one knows, and no one knows how this stuff is going to actually shake out in a big systems approach type thing. But it's a good article to stay abreast. I should disclose I do own both of those two companies, so it's kind of interesting seeing this whole thing unfold and develop, and it's going to be tough to hang on to those if those stock prices take off much more. Your thoughts, Ken?
Well, I think what's especially relevant, Mark, is that third paragraph right there, which gives us a little bit of background, and maybe we're seeing the same thing that we saw in some other groundbreaking kinds of drug therapy. Remember, folks, that Hep C drugs cure Hep C. They don't just give you a drug that you have to take for the rest of your life. They actually cure the disease. And we have the same drug for life or treatment for life with sleep apnea. But I'm kind of heartened to hear that we've fought this battle a number of times prior, and that fighting the battle again with the diabetes drugs or the weight loss drugs is maybe not going to be as difficult. The other side of the coin is who's going to pay for it, and I hope we find a way to understand that if these things cost a lot of money, somebody does have to pay for it in the long run. It's not free, and it's not some person that you can't put your finger on. It's you and I that pay our taxes that are going to be paying for it.
And I didn't include a slide on this one, but I think it was you that mentioned it, Ken. There was also a companion piece out there that pointed out that people are beginning to lose enough weight that they need to have uh, procedures done to basically bring their face back. They're actually calling it COVID face or whatever, and that had to do with InMode, I believe.
Yeah, the cosmetic surgery industry might actually be benefiting from the weight loss that's going on, not only in the face, but in the fact that if you were extremely overweight, losing a lot of that weight doesn't rectify the problem of sagging skin and extra skin that was stretched out and is not going to spring back as if you were 18 years old again. It's going to stay kind of stretched out. So some of these other cosmetic solutions are going to be quite important going forward, especially for people that are looking to maintain a certain cosmetic level of youth, as well as maintain a healthy weight.
Well, that's going to be one of my new excuses when Wendy asks me anything about it, that I don't want to lose too much weight too fast. And that's my story, and I'm sticking to it.
Yeah, Matt Spielman, who many of you know from our programs, is making the same point that came to me as I read that Lilly is making a direct application for a sleep apnea kind of a drug, and
Yes.
that's I think that the reason it hits Matt and the reason that it hits me is we're both shareholders of ResMed. ResMed is a mechanical way to deal with sleep apnea, and ResMed certainly took a beating recently in its stock price. It's come back a little bit, but ResMed has a lot to lose if we can find a way to deal with sleep apnea through pharmaceuticals rather than mechanics.
Yeah, and we'll see ResMed will show up in a couple of the screens, I'm pretty sure, as we took a little bit broader look than when we first started yesterday.
Yeah, Nick is making the point, and it's a good point, Mark, that a lot of this weight loss is not pills. These weight loss
Oh,
things
yeah.
are shots. They're injections. They're once a month injections for the most part. And if you're really going to move into the place where you're losing significant weight, they definitely are injections. They haven't found a way to take the molecular structure and get it into a pill so that it works the same way. So if shots scare you, then this particular method of losing weight is probably not for you. At the same time, the way the shots are delivered are so high tech, so revolutionary that I doubt if most of you would be able to feel the injection as it happened if you turned your head away and nobody told you when it was going to be given. The new shots for these things are basically painless, completely painless.
Yeah, and we should point out there are some late stage trials on pills that could disrupt some of this also, or add to it. Who knows? So
Yes, yeah.
those are out there. And on our website, Ken actually brought this up, and we've shared it with the audience. The company that actually makes the delivery devices for these injections is known as Stevanato, STVN, and you might want to take a look at that one. It's a little bit surprised you didn't bring that one for tonight's.
Mark, did we lose you? Mark,
I'm still here.
Mark, you're fading in and out. I don't know if it's my internet or your internet.
Let's.
I
Okay.
can hear him, Ken. I can hear him.
Okay, good. Okay, Ken's got.
Okay, then it's my internet, and I've been having some issues, as I told Mark. Yeah.
Those Comcast guys climbing around are causing issues. So let's go ahead and press on. Just want to again make everybody aware that the Dumb Money movie is out there. That's about the escapades and the legend of GameStop and that crazy situation that erupted a couple of years ago. And did try to put together a trip to Punxsutawney. Didn't work out yet. Haven't given up completely to actually go to the cinema in Punxsutawney, but it's out there. All right. Next is our Groundhogs. No major changes in the standings. A lot of the people have been lurking. Herb Lemkool continues to move up the list, making a strong move, but I have faded a little bit. That's mostly thanks to Ardelyx. Anything jump at you, Ken?
No, it's getting pretty tight at the top up there, though, Mark. 20, 30,000 in these big portfolios doesn't take much to move you a good 10, 20,000 when the market's doing either really bad things or really good things. So we have some tightening up there, and I think it's anybody's game. That contest is going on for quite a while yet. It goes all the way to the 2nd of February in 2024. So we have a good solid 5 months yet to play around with this.
It's kind of fun to watch the bubbling that goes on. I actually dream about two things. The first would be, and the first one's a nightmare. Back when I won the contest, I had took over the lead on the last day against an undisclosed competitor. And the other one that was pretty cool was when Ann Manning won. She was in a dead heat fight with like 5 other ladies, and they all took turns taking over the lead in the last few days. So when Ann Manning won it, she was edging out that large group, and it was a lot of fun. The other thing that I did want to point out, first of all, it is comforting or refreshing to see all the millionaires on here, Groundhog Millionaires, because we had several underneath for quite some time. And the other thing to keep in mind is if you're feeling injured or subdued or just simply sad, that value line arithmetic average, again, is all of the above investing, the type of investing that we do. And please note that it's not doing very well. So it's not unusual for somebody who does what we do to be, somewhere in that neighborhood. So just keep that in mind. This number here is powered by the Magnificent Seven. Grantham and Joshua talk about that quite a bit. The Magnificent Seven stocks at the top of the Wilshire 5000. So some good stuff. And Ken, the monkey is still roiling down at 148th. All right. We got a month to go. I'm continuing to add rabbits to the collection, trying to get enough rabbits' feet, and it doesn't seem to be working so far, Ken. But here is our list of best small companies for this past year. We are beginning the process of thinking about what the next year list will probably look like. Ken and I have both posited that a number of these companies are probably going to spill over into next year. One that strikes me in particular, I added this column just for some perspective. This is the projected 2024 sales over 2023 sales. So again, it's basically the next year out over what's projected for the end of this year. What I find interesting is down here at MP Materials, because we have been talking about how they're bringing additional production online, and I think you see it there. I think what we're proving with this annual contest going from Halloween to Halloween is it can be tough. I think MP Materials will probably get at least 1 vote, maybe 2 votes from us to continue in next year's list, and it'll be based on this reality that there's a pretty good company there. They make all kinds of stuff for electric vehicles. So we might be wrong for 2023, hopefully right over the long term, Ken. So what do you see here?
Well, I see a slowing down in the economy, Mark, if these are telling us a tale here. Those numbers for a lot of the companies appear to be moving in the wrong direction. But overall, when you focus on just a few of the companies and you even account for that big 97 in that 19 average right there, overall, maybe we've survived and we're going to have that much anticipated soft landing that everybody's talked about, and we'll go through some slowing, but we're not going to go through something dismal. We'll just have to wait and see. I think everybody has a different opinion about it, and they're all willing to speak about it on TV at the same time. So turn the TV on, listen to who you think is going to verify what you think, and then you'll be happy. All right.
Yeah, and here's the company. For those that are not familiar with the company, this is the cosmetic surgery company that was being mentioned with the weight loss situation. And there seems to be an ample field of opportunity in weight loss based on the statistics I'm looking at, and my bathroom scale, which I blame on losing our dog of many years and my wife's Achilles tendon rupturing, and that's because the weight gain can't be my fault, right, Ken? Anyhow,
No comment.
I can throw you some tennis balls. Will that help you, Mark?
that I would
You
love
face
for
them
you to
down?
throw me tennis balls, Kevin.
And have you run around the park?
Just don't get
Yeah,
them
I
stuck
can
on
do
my
that.
roof.
Good.
All right, so we'll just leave that for now. Everybody, either buy some of these stocks or buy their products over the next month and see if we can't bring this home. All right, Ken, you ready to talk about some screens?
Absolutely. This is the fun part here. Let's get into this, okay?
All right, so here's just a sampling. Anytime I sit down for the roundtable, I generally go through a number of these, but this is in response to Dean Parenti specifically and a few others. I don't know if Dean's in the audience, but these are some of the screens you can run either at Manifest or through some of the sources that were being described earlier. Value Line at the library, Morningstar at the library, or if you actually have a subscription to either of those. But we're going to take a look at, first of all, that relative strength index. A low relative strength index can indicate a potentially oversold company. And I will tell you that this one has been the most, let me just say, rewarding in terms of efficacy for the companies we have featured over the last several years. So I will often check that just for a potential opportunity that has been beat up too badly. Ivory Soap is a reference to our just simply the companies that have the best return forecasts and quality. Ken's favorite screen, or one of his favorite screens, is the Better Investing predefined screen on small companies. Morningstar, great source, low price to fair value, and then I limit it to good or excellent quality just to keep the field fairly decent. And then we'll go back and spend a moment with Jeremy. So here we go. Here's the
Mark,
first.
I've brought Dean into the back room, and Dean, you're free to unmute and comment on whatever Mark's doing. If you have a question, now's it's one-on-one. You can ask him yourself, okay?
Okay.
Good, good. I appreciate it. I'm just here listening and want to learn how to use that screener better. Thank you.
Okay. Well, many of these are actually from Manifest, but a couple of them aren't. What you're looking at here is the output of one of those screens. If you go into Manifest, we can demonstrate this here in a few seconds. I simply am looking for top echelon quality along with a relative strength index under 30. Those are the only two inputs for this particular screen shown down here. And you actually see some fairly interesting study candidates that pop up off the screen. And up at the top is just some of those same screens, only going a little bit deeper into some of the really crushed companies here lately. These are relative strength indices down below 20, which is why Matt had asked why isn't ResMed on that list. ResMed actually checks in at slightly higher, so it just missed that field because ResMed has been getting punished for perceptions about what will happen with those obesity medications. And the one up at the top has been also included just to keep Kevin at bay, noticing that Portillo's stock price has been punished enough that it actually shows up on a relative strength index screen. But from top to bottom, there's some interesting companies there. Len actually put out, Ken, are you familiar with Materialize?
No, I'm not. It's a new name to me, Mark, and I'm jotting down a few of these new names to try to figure out whether it's something I'd like to dive into.
Well, a number of our listeners and Natalie have actually called and asked me to ask you to put down your pencil because they're involved with 3D printing. And you've been known to hyperventilate a little bit over the 3D
Yeah,
printers.
I really got excited about 3D printing a number of years ago, didn't I?
Okay, and they're headquartered out of Plymouth, Michigan. So that's also another future Portillo's location. So there's a lot of things coming together here. So Materialize, it's an interesting company to look at, and Len was coming out with a number of things. You can see there's some interesting, very optimistic projections on the far right there. So it might be worth digging into a little bit. It certainly is going to be on my short list for something that might be slightly speculative for the best small companies, but it's worth knowing a little bit more about that company.
I really don't understand, Mark, why the dollar stores have been whacked as hard as they've been whacked. I mean, I see Dollar Tree and Dollar General both on this list, and the niches that they fill are not being filled by the Walmarts of this world or the Targets of this world. I can't understand why they're so undervalued right now. Part of me says I need to go out and buy lots of it, and part of me says beware, because the whole group of them is beaten down. We'll have to see.
Yeah, I don't know either, except that there's an awful lot of almost doomsday type talk of people who are predicting 5 out of the last 2 recessions, and they seem awfully preoccupied with recessions. And then I think what you would find if you really studied these type of companies closely is they're actually quite recession resistant. And so, yeah, it could scream some opportunities in either of the two. Now, Dollar General's getting all kinds of, well, not all kinds, but some negative press based on some pricing issues that they had, mistakes that were made. I mean, who doesn't make mistakes? And I do find
Well,
it
Mark,
kind of compelling.
if you remember, we saw an industry like this. It must have been 10, 12 years ago. It was the for-profit educational industry, and it had a whole bunch of companies that looked pretty good to us, and they were all being just hammered down to prices that we had never seen before. And we started seeing articles in magazines like Better Homes and Gardens, and we said that could be a new indicator that when you see an article about for-profit education in Better Homes, maybe you have to run for the hills then. The same thing, Dollar General took up a front page article in the Flint Journal. Now, the Flint Journal is nothing like a paper that it used to be. It's about 9 pages long, and it basically reports on lifestyle. So to take up the entire front page with an expose on Dollar General and then go into an entire second page out of this little tiny newspaper, maybe that's an indicator that I should stay away at the same time. I don't know.
Yeah, and out there on the far right, you do see some fairly lackluster expectations for sales for the next couple of
Yeah.
years. And I would point out for Mr. Gologly that the best looking numbers here belong to Portillo's.
Moving, go back to that slide if you can for a moment. No, look at the 2 to the right of RSI, the Morningstar price to fair value. And when you look at the Dollar Tree, it's pretty much fully valued at 101. So it would be the same as if it were selling near its current PE, if on the SSG. And if you look at Dollar General down there, they're at 56. And I think in much the same way that Ken was just talking about, that could be too good to be true. I don't know. My club used to own Dollar Tree. We don't own any of them right now. But that sort of gets to maybe what Ken was saying, is that maybe there's something fundamental going on that hasn't shown up yet, that the screen is sort of lagging behind. That's
yeah,
it.
the Morningstar analyst is kind of out there compared to this one and this one, because that's got to be dozens of analysts. And it is interesting. It begs the question, what do they see? What can I understand if I dive a little deeper and try to figure out what they see? Good stuff. Thanks, Kevin. All right, here's another screen. We just love to run this one, and I've just limited it to the top 5, where I basically enter just one number. The manifest rank is basically the combination of quality and the return forecast, known as PAR, basically equally weighted. We just want to see the top, usually 0.5%. And again, some fairly interesting companies to take a closer look at, including the before discussed Dollar General and InMode, but check out the other companies that are there. MP Materials also. And Ken, you want to put in a little warm up on that one?
Well, I'm going to present Globus Medical this evening, and I won't say too much about it right now, but Globus Medical to me is a really great example of a stock that's just been whacked for no apparent reason of if anything I can figure out, except maybe it was a little bit too generous in making an acquisition, but it certainly didn't deserve to have its price cut the way it did. And it brought on a pretty decent company. It merged with a pretty decent company. We'll talk about that some tonight and why it might be a very tempting entry point to look at a very, very high quality company with a pretty decent par attached to it.
You know, I'm making a note that I'd like to take Nuvasive and do a quick analysis and basically a price check on aisle 4 to see if what type of perceptions are out there and what did they pay for that that combination with Nuvasive. And I don't at least not yet. Ken and I did some cursory sniffing around. We don't see it yet, so could be interesting. All right, Ken, this is one of your favorites from Better Investing. I'll let you.
Yeah, I run this screen once a month, once every 5 weeks, and I'm always looking for companies that I don't know very much about. I notice a company called SPS Commerce, and I don't know very much about that company, so it will go on a short list for me just to take a quick look at and see if it's something I want to spend some time on. I've seen Clearfield on this list now for quite a while. I really like Clearfield. I really, really like Technoglass and Descartes Systems. Descartes is kind of hard to buy. It's not an American company. It's traded on the Toronto Stock Exchange, but it's into pretty high class types of software. It's a very interesting kind of study.
That is available.
All in all, there is an ADR attached that you can buy, but it's not always as easy to. It doesn't have a whole lot of float in the United States. That's a good way to say it. So it's not as easy to trade as a lot of things. You know, most of us are used to putting in a trade and having it executed almost immediately. And that doesn't always happen with some of these small companies that are ADRs here in the United States. But running this screen, and it's been as long as 15 companies in the last couple months and as short as 8 or 9 like it is right now. This is a very, very strict screen. And if you use your SSG Plus tool and press that question mark next to small companies, you'll see the criteria that have been set for a company to make this particular screen. So it's a really a high class set of criteria. And if a company's down here, it doesn't mean it's a buy, but it means it certainly fits the consistency and the quality and everything else that you're looking for in any kind of company.
I do think there were another 3 companies listed. I did sort it by sales growth descending. So I was sticking to companies over 12%. So there were a couple more companies.
Yeah, I thought it was a little bit. I thought it was a little bit longer than this, but yeah.
Every time I truncate one of these lists, you guys write to me and tell me that I did it. So, okay. All right. Speaking of our friends at Morningstar, in fact, I want to take a look at the column that came out this morning from Susan Dubinsky, because she's got quite a track record, and see if any of these are on there. This is simply just looking for companies that have a low price to fair value, but not too low at Morningstar. Because right now the average price to fair value is at 80, so at about 80%. And I didn't want to get too many standard deviations away from that. Again, you more often end up in too good to be true land, so I limited it and just kind of kept it to this field. I also limited the field to companies with a quality ranking greater than 60. So you see that here. and it's a pretty decent list to do some quick looking around. It's been a long time since I looked at Coach Ken, Tapestry, now Tapestry, but it appears to be showing up there, and there's a pretty good theme going on right now with the amount of luxury and premium goods companies being purchased. In fact, my company for tonight is a premium company, and I just think there's
I
interesting.
think we see don't we see Louis Vuitton on one of these lists that we're doing right now, Mark?
Yeah, and they actually have shares of Louis Vuitton are owned by uh, Diageo, so we'll see that also.
Yeah.
Yeah,
Yeah.
some good stuff. PayPal has been an undervalued play that Kim Butcher has presented a few times, and we're kind of hoping that that pans out. You see some fairly low relative strength indices here, and some interesting companies. I'm not ready to go with Tencent yet. That's a Chinese company, basically a Chinese.
Mark, I want to answer a question that I'm asked quite frequently when I talk about screening in different groups. And folks, screening is not one of the last steps you do when you're ready to buy a stock. A screening is one of the first steps you do. Anybody that thinks that Mark is giving you a list of 10 surefire wins right here, you need to rethink that conclusion. Mark is giving you a list of 10 ideas, and 3 or 4 of them might be something that you proceed with. Screening is the first step along the way to buying a stock, not something you do at the end.
Absolutely. And let me also reinforce how weird some of this stuff can get. You'll see Albemarle here. That's a lithium company and a specialty metals company. Notice that Value Line basically has very, very, very pessimistic long-term expectations. You take 2 steps to the right, and this is one of the most optimistic, because that's the price to fair value according to the analyst consensus. And you talk about 2 widely divergent opinions. So now you got to play referee here. You know, Morningstar is more along with the analysts over here. This number is also pretty high. You know, what is Value Line thinking? And again, it can be reinforcement of the challenge that many of us, including Value Line in some cases, have with either early stage or companies that exhibit any form of cyclicality. So just something to keep in mind. But those are 2 widely. That's probably as big a spread as I can remember in recent memory between something like that. Okay. Something else that you've seen us do over the years is watch for people who seem to know what they're doing. This happens to be Jeremy Grantham's GMO Quality Fund, which actually has a track record going back probably pretty close to 40 years to its predecessor. And in this case, they have outperformed the market, you see, by a couple percentage points. Jeremy talks about a lot in his talk with Josh Brown about what is quality and what do they go looking for. And a lot of times we'll dive into the Morningstar holdings. Again, I'm just sitting here saying, you know, quality has been a top performing type opportunity. Uh-oh, Logie Bear's here. You want to say hello to everybody? He's just looking at you. All right. So this is basically a list of quality companies, and I just like to see what have they been interested in actually accumulating or acquiring lately. And here's the answer to the question. Within the last quarter, at least the second quarter of the year, they added shares of, imagine that, General Electric and Diageo. You see the actual amounts here. So again, we're looking for bumps up in percentage share change or new purchases. So what do you think, Ken? I mean, Jeremy's people are basically in agreement with our addition of General Electric to the electrifying portfolio.
Well, I've mentioned earlier before we started the session, Mark, that as I glanced at the list, American Express stood out for me. He's held it now for 7 years, and I've always thought of American Express as kind of the poor cousin to Visa and MasterCard. I never really considered it as an investment when I could buy Visa or MasterCard. and yet he thinks it's very high quality, and obviously holding it as long as he had, he thinks that things are going pretty well. The other thing that sticks out to me, Mark, is how he moves towards wide-moated companies. Look at how many on this list are considered wide moats, which means they have a lot of barriers to competition. It's going to be hard for somebody to come in and compete with them and seize their business. But you know, more than half the list is this, more than 2/3 of the list is this wide moat company. I think that's another concept that a lot of times we forget to include in our analysis when we're talking about some of these different companies.
Yeah, and when he talks about, and again, keep in mind that a quality company is also going to very often coincide with a wide moat. I tend to think of them in very similar ways. And like we were saying just a few minutes ago, here's one of the bigger companies in the world, basically known for luxury and premium stuff, that has been there for a while, and it's one that a lot of people have a lot of respect for. And of course, these guys, if investing drives you to drinking, there you go. Okay, anything else on this?
Does the lack of technology on this list say anything, Mark? I'm looking at the PE list, and it's, you know, I'm not getting sudden headaches from seeing PEs at 50 or 60.
Yeah.
And I'm just wondering if does he invest in any technology in this fund?
Well, one of the things I thought I might take a quick look at is here we're actually in the manifest forum now. This is the warm up for today's event. Oh, I grabbed the wrong one, I think. Companies for the roundtable, sorry. And I'll see if I can't blow this up a little bit. Here's the bigger list of companies, Ken. So here we're looking at the top 10 companies by holding. You can see Microsoft, Apple, Amazon, and Alphabet. They're all in here. So these are the top 10.
He does deal with them. Okay.
Yep. Here's your second 10. So again,
and you were basically pulling out newer purchases then, right?
Yeah, if I saw anything with a big green, by the way, Johnson & Johnson qualified up at the top of the list as one that has been added to quite a bit. So you can see this is a very high conviction fund. They hang on to the stuff for quite some time. And again, the purpose of showing this is a successful fund run by somebody who seems to know what they're doing, very high quality, decent returns. So, you know, what have they been buying lately? And notice that Lilly is also one that has been accumulated in the last year, along with other companies that have been high on our list in recent months, Taiwan, TJX, there's others. So it's kind of fun just to dig into those a little bit deeper and take advantage of somebody who seems to have some pretty good ideas over the long term.
Mark, what's the ticker of the fund again?
The ticker of this particular fund, let me go back to here, is GQLOX. So just think GQ like the magazine, LOX like the bagels, and GQLOX. And the ticker that they're going to be coming out with, and I will make it just kind of standard operating procedure for the Robertson Fund to watch, it's going to be QLTY. That's going to be an ETF, and I'm just going to watch that, see what do they put in it, and basically watch it for changes over time. QLTY. It's not available yet.
And
go ahead.
And you're accessing these lists through through Morningstar, right, Mark?
Morningstar, yes. That's where you see this slide from. Okay.
Can I chime in here for a moment?
Sure.
On this moat, just so people understand, it can sometimes be a little bit off. I just was reading on it just to double check. But an economic moat in Morningstar nomenclature is that if you have a wide moat, you have been sort of better at your return on invested capital and your return on equity for 20 or more years. So that means you're not going to generally see young startups with those kind of wide moats right there.
Sure.
Second thing is that a narrow moat is one who has done it over 10 years. So we sometimes may think a narrow moat is like, let's stay away from it, but that's still something that's really pretty good. Whereas the no moat, the third one, is one that hasn't done it for 10 years. Just sort of an FYI so people sort of understand where they're coming from. And again, those wide moats are generally going to be companies that have done this for a very long time. So they're going to be a really established company.
Yeah, and he kind of uses the terms interchangeably during the interview when he's talking about quality. He basically talks about return on however you want to measure it, long-term return and persistence of returns. But then he does talk about the stability of profitability, and he talks about things that we recognize as components of quality as we know it. So it's kind of interesting to hear him talk about these things, because he throws a few arrows at all of these multi-factor people that they basically wrestle with this stuff for 20, 30 years, and then they ultimately come to the conclusion that quality probably matters most. And it's just fascinating to see him walk through that.
So they go through all that just to be able to get to Arnold Bernard's comments of 1959. Quality matters.
Very true. Very true. Yeah, Value Line had this stuff figured out quite a while ago. All right, so we're at 11 or at 156. Let's 256, I guess here. It's earlier than I think. Here's some upcoming features coming up. I do want to spend some time with Meb Faber's work on dividends, understanding dividends better, and then we will be continuing our hunting for the rabbits come Halloween. And then we're also going to have some type of a celebratory tribute to the blind leading the blind sometime soon. All right. Here's a special invite to next week. Next week's bull session will include a special segment on the thrift savings plan, basically the 401k for government employees and military personnel. And we did a version of this program about 10 years ago. It's probably the most popular program we've ever done. And I'm honored and grateful that Ty Hughes, one of Kevin's colleagues out there on the East Coast, is going to join us for that basically discussion and description of the opportunities that are available in the thrift savings plan. So you're all welcome to join that. And that rabbit on the far right is not doing a face palm. He's actually praying. All right. Just here's your reminder that we do archive the roundtables and bull sessions on YouTube, so you can catch them there. And this one was contributed by Susan Michelik of Janesville's Bower City Ladies Investment Club. And I agree with Susan. And I don't know about you, Ken, but I think the colors in Michigan are coming sooner than usual.
I think they are also, Mark. I have planned a trip up north on the 17th, 18th, and 19th of October, which is usually prime color season in the lower peninsula. And I think we're going to be past it and everything. And we're going to have to be driving around where we are to see good color. No elevation, but still great color.
We'll come our direction and we'll steer towards Punxsutawney.
All right. Elevation there. Yeah.
Good stuff. All right. So with that, we'll just make a nod in the direction of making successful investing unimaginably imaginable. And again, most of you have found that permanent link to these sessions that are there. Any other thoughts or things in the hopper, Ken?
Nope, just happy fall to everybody. My favorite season of the year. And if you happen to live where there's only two seasons or one season, I pity you a little bit. Wouldn't trade what we do here for anything.
Yeah, I've lived all over the country, and I got to admit I missed the change of the seasons while living near San Diego for sure. So, even though there's a lot of good stuff to be said about San Diego and its climate, there's good stuff here too. All right, so
Nothing wrong with falling asleep at night with the windows open and having it go down to 58 degrees. That's makes for nice sleeping, I'll tell you.
right, so we'll shut down now, and those of you that'd like to join us for tonight's roundtable, we'd appreciate that. The stocks should be interesting. You've already heard a couple of them: Globus, Diageo. Kevin is going to bring Edwards Life Sciences, and what's the last one I'm forgetting? Oh, how could I forget? Tractor Supply and Manning. And they do sell guns at Tractor Supply. From somebody who's shot a gun once in his life, I think. All right. Take care, everybody. Good hunting out there.
Good afternoon, folks.
See you later, Kevin.
Goodbye.